Welcome, learning is growing. This is our next series in farm account. I believe as we learn, we grow, and as we grow, we become. Now, in our first session, we looked at farm account generally in terms of one, we looked at the introduction, what it's all about farming. Then we looked at farming activities. Then we moved on to the areas of revenue generation. Then we looked at the objectives of farming. What are the objectives of farming? Then we looked at the methods of farming, which are two methods. There is single entry method and there is double entry method. Now, we now come to the preparation of farm account, which in the preparation of farm account, we look at the single entry, whereby we'll be preparing only two accounts, trading profit and loss account and the balance sheet. And then we have double entry, whereby we'll be preparing trading account for specific farming activity. And then we come to income statement, which is profit and loss account, which is now our general account, incorporating all the farming activities in trading account. And finally, we get the statement of financial position, which will look at the format and then the presentation. How do you do the presentation of farm account? Thank you and feel informed. So this is the question that we expect. This is the nature of the problem that we expect in farm account. So in this question, we can see there is opening stock. Other books call it inventory. We have barley, which is 500, potatoes, which is 800, cattle, which is 1000, sheep, which is 700. Purchases entails cattle 8,000, sheep 1000, seeds 500, manures 1000, cattle feed, which is 1000. Crop expenses, we have labor, which is 400, other expenses, which is 300. We have livestock expenses, veterinary, which is 500, labor, which is 2000, dairy, which is 3000, electricity, which is 200. We come to general overhead. In the general overhead, we have rent and rates, which is 100, 1000, insurance, which is 200, wages, which is 800, and bank interest, which is 500. Farm machinery, which is 10,000, cash, which is 1,000, bank or cash at bank, which is 3,000, land is worth 20,000. Expenses of machinery. One, we have repair, which is 300, diesel and oil, which is 500. Sales. What are you selling from this farming activity? We have bodies, which is worth 3,000, potatoes, which is 2,000, sugarcane, which is 3,000, cattle, which is 10,000, milk, which is 2,000, sheep, which is 3,000. We come to loans. Loans which were borrowed by the farmer, which is 8,700, capital, which is 20,000. We have creditors, which is 2,000. Now we have additional information. So in additional information, we are told closing stock, barley is 1,000, potatoes is 600, cattle is 1,500, sheep is 1,000. 50% of the rent and rates may be taken as the share of owner, which is time. So the name of the farmer is called time. The family consumed the following: milk 200, potatoes 100, barley 700. So you are required. So in such a question, we need to know what we are supposed to prepare. So we are actually required to prepare, number one, farm account using single entry, and then number two, farm account using double entry. So assuming that that is the nature of the question that we have, so what are the solutions? So we look at the solution. So before we look at the solution, it is good to have the format in place. So this is actually the format of the farming account. So we have single entry method, whereby this is actually the format, we have trading profit and loss account for the year ended, items, crop, livestock, total. So we have sales, you give the amount, returns, you less, net sales, this is the amount, less cost of goods sold, we have stock, add purchases, add carriage, add direct expenses, you get goods available for sale, less stock, less return outwards, less drawings or consumption, what was consumed, you get the amount, and then the amount you actually less it from goods available for sale. What you get is cost of goods sold. Cost of goods sold minus now expenses from net sales from each and every category. Now what you get is your gross profit. So gross profit for each and every farming activity is here. Less expenses, which is direct expenses. We have salaries, we have rent, we have depreciation. You put the amount here. So you say gross profit minus all expenses, indirect expenses. What you get is the net profit. So this gives us actually the value of our net profit. Double entry method. So in the double entry method, we said you prepare individual account. For example, we have crop account. So in the crop account, we will be actually focusing on, in the crop account, we will be focusing on number one, for the year ended, date, month, item, amount, sale, that is it, return, that is it, net sale, that is the amount, less gross, stock, purchases, carriages, direct expenses gives you the total, less stock, less what to less the very amount, like we added direct expense here, so we were to less consumption, so it will give us the amount. So the amount, the sales minus cost of goods sold gives us the gross profit. Now in general profit and loss account, we bring all the gross profit from the account. So we can now take the question. This is actually the solution for the question. So in the question, we have been given solution to the question, income statement for the year ended 31st December 2020. So in our solution, we are using the single entry method. So in the single entry method, we have sales for each and every item. Sales for livestock is 8,000. Sales for crop, no, sales for crop is 8,000. Livestock is 15,000. Total 23,000. Less cost of goods sold. Stock we have 13,000, 1,300, 1,700. Total 3,000. Purchases 1,500, 10,000. Total 11,500. Expenses 700, 1,000. Total 1,700. So goods available for sale will be 3,500, 1,000, 12,700, 16,200. So what you do, you say the crop net sales minus the goods available for sale minus less stock, less drawing, you get cost of goods sold. So our cost of goods sold is 1,100. So 1,100 minus the sales. So sales minus cost of goods sold, you get the gross profit, 7,500. Sales for livestock, 15,000 minus 10,000, you get 6,800. Sales for total is 23,000 minus 11,100, you get 19,900. So this is for livestock. So what you get in our calculation is this amount less all indirect expenses: electricity 2,000, rent 5,000, wages 800, interest 5,500, machinery 800, depreciation 10% of 10,000 is 1,000, insurance 200. So what you get is 4,000. 11,900 minus 4,000 gives us a net profit of 7,900. So that's the solution for single entry. Now in double entry, be careful now. Can you focus on this? Double entry, we have crops for the year ended at 1st December 2020. Items, we have sales, which was 800 less cost of goods sold. We have stock, 1,300. Purchases, 1,500. Direct expenses, when you total, it gives us 700. Goods available for sale will be at 500 less stock, 1,600. Consumed, 800. So stock and consumed gives us 1,100. So 500 minus 1,100, no, that 500 minus 2,300 gives us 1,100. So sales is 8,000 minus cost of goods sold, which is 1,100, gives us 6,900. So this is the gross profit pertaining crop only. Livestock, we have items amount, sales 15,000 less cost of goods sold, stock, opening stock, which is 1,700, purchases, which is 10,000, direct expenses, which is 1,000, goods available will be 12,700 less stock. Stock, we have 2,500 and 200, which gives us 27. So 12,700 minus 27 gives us 10,000. So 10,000 is our cost of goods sold. 10,000 minus 5,000, no, 15,000 minus 10,000 gives us 5,000. So that's the gross profit for livestock. Now in the general profit and loss account for the year ended at 1st December 2020, we have crop gross profit is 6,900, which is here. Then livestock gross profit is 5,000, which is here. You total, you get a gross profit of 11,900. Less expenses, electricity 2,000, rent 500, insurance 200, wages 800, interest 500, machinery 800, depreciation of machinery 1,000, which gives us a total of 4,000 as expenses. So gross profit is 11,900 minus the expenses, which is how much? 400. Gives you a total of net profit, which is what? 7,900. Thank you so much for getting in and learning. We will be looking at now the balance sheet. So this is the nature of the balance sheet that we get when we actually work out the statement of financial position. So this gives us the financial position. We have capital amount, we have this, all you get capital employed to be 35,100, again 35,100. Thank you for watching. See you in the next session.